right, welcome everybody. Shane Carter here, Hampshire Capital. Along with me, as always, VP Investor Relations and Operations, Eddie Austin.
How are you, Shane?
I'm doing great, my man. How you doing?
I'm doing great, man. Beautiful day. Good day to talk about real estate, talk about investments, and just geek out about the current economy. And we were having a pretty good conversation before we started today, and some really good indicators and how we relate to the things that we've seen in the market and how that relates to us, and then how that would relate to our investors. So let's get started.
Yeah, absolutely. This is recording this August of 23. We had some interesting headlines and tidbits that came out last week that were reported. Some people didn't tie them together. In my mind, they tied together, so I wanted to share. Number one is renowned investor Dr. Michael Burry, kind of famous for shorting the mortgage market back in '08 and making a ton of money, star of the book and film The Big Short, and his investment firm, Scion Capital Partners. They placed a $1.6 billion hedge or short or bet on the NASDAQ and the S&P 500 dropping to a significant amount. So they pledged 1.6 billion of their fund's capital in making this bet. And to me, I very much respect Dr. Burry's investment thesis, how he goes about doing what he does. Very, very big on data analytics, seeing trends and seeing the fundamentals of why something is going to occur, which is what made him successful in, again, predicting the cracks in the mortgage industry when everyone laughed at him and said, there's no way these banks are going to fail. There's no way the mortgage industry is going to fail. We're at all-time highs and we're going to the sky. And he saw it and he shorted it and made he and his investors a lot of money. So, Dr. Burry's track record speaks for himself. He correctly, invested and foretold the inflationary time period happening in 2020. COVID exacerbated that, but he still knew the fundamentals were there for an inflationary time period coming. And then he makes this bet here last week, right? 1.6 billion of his own money and his investors' money that the stock market's going to go down. And so to me, it's not a matter of if, but when. And I think that's going to be his only concern is it going to happen in a month or is it going to happen in a year?
Right.
It's going to happen though, and I think it's going to happen in less than a year's time. I think it'll likely happen in the next 6 months. But that was an interesting thing to note, that we have a very astute investor with an amazing track record is predicting and making a huge bet that the stock market's going to go down. So we know that's going to happen. Then it was released that Berkshire Hathaway, run at the helm as a renowned investor, Warren Buffett, somebody who has an amazing track record himself in terms of his investment portfolio through his career, and a billionaire, and an amazing track record of investment, and being a very astute and grounded investor in terms of how he makes decisions on when to buy, when to sell, etc. He placed an $800 million investment in national home builders, primarily $700 million of which was in D.R. Horton, Texas-based developer builder. The rest were in NVR and Lennar Holdings, another, again, national building corporation. So, most people maybe didn't correlate those two things, but they correlated in my mind because, we're a development company, we're in commercial real estate, we're in housing. And so I see one astute investor betting the stock market's going to go down, and I see another astute investor betting that housing and the housing fundamentals are incredibly strong, such that they saw a buying opportunity to acquire stock in a publicly traded firm that does that. And right. I think that's interesting and something that we should discuss. And what does that mean to us and our business? And what does that mean to us as investors?
Right, absolutely. It's a great topic, and I know that back in 2020 we wrote an investment blurb about investment and housing and stuff like that, and housing affordability. And we could kind of see that housing affordability was going to switch a little bit. And what I mean by that is, we didn't exactly know that it was named COVID at the time, but what we did see was interest rates were going to climb, and we could see the indicators that interest rates just had to climb. We knew with inflation, they're going to try and hedge that with, raising the rates of mortgages and bonds and stuff like that. So with that, I think what happens is your affordability goes down because you have two things going on. You have a housing supply issue. So that housing supply issue would directly correlate to Warren Buffett's bet there is there has to be homes built. Because with the supply low, it means that housing price will go up because there's a shortage in supply. So if there's a shortage in supply, the house price goes up. And if medium household income is not climbing with that trend, and your interest rates are higher, if you look at what used to be a $450,000 home is now a $650,000 home, and then you have a 6.5% to 7% interest rate, and let's say you don't qualify for FHA or a first-time home buyer, you're locked into having to pay that 6.5%. It's not a nice government-funded or debt product that's good for you. So from there, you have 6.5% to 7% interest, and what if they say they need 10 to 15% down? 10 to 15% down, you went from $450,000 to a $650,000 home at 10 to 15, they've made 20%. That is probably no longer affordable for a lot of people. So housing affordability, now you have a housing affordability crisis because supply is low. So
absolutely.
Definitely sees this, and he definitely is making the bet that, look, supply has continued to be low. I know we were talking about New Hampshire and the housing supply and a couple of other neighborhoods. Housing supply has just never caught up, and the amount of homes that's been built is phenomenal.
Yeah.
They're building houses like crazy, and we still can't catch up.
Can't catch up. Nope. We're still behind, and frankly, we're going to be behind for years. And what we had was this coming together also of really high material costs, right? Some of which have come down, supply chain issues. And so we've been dealing with this for years now. And now the market has softened so much that a lot of developers are sitting on their hands. A lot of folks aren't building. A lot of builders aren't building. And we're still not producing. Yet we still have, net migration. We still have, in certain areas, population's rising in terms of births surpassing deaths. But in general, it's that net migration that continues to drive that. And frankly, we need it, right? We need it. So yeah, look, Warren Buffett is investing for value. And this was a quarterly report, so he could have bought it any time in the last 3 months. But he saw, and what they saw at Berkshire was that this is a good value now, right? These builders are a good value, and from a price earnings ratio, but also where is this going, right? Why invest now? Where are we going? And in 2, 3, 4, 5 years, where are we going to be, right? And that's what these guys are seeing. Burry's bet and investment is probably a little more short term, right? In terms of call it a 6 to 18 month time frame, whereas Berkshire Hathaway's is probably a little bit more of a longer vision of, hey, let's buy this now because this stock is probably not dropping too much from here, and it has this 2 to 3 to 5 year window that it's going to continue to grow. Also, a little known fact, D.R. Horton also has a BTR or build to rent division. So that could be a component as well. We don't know all of the analytics that go on behind the door there at Berkshire Hathaway when they make these investment decisions with their portfolio. But as we've talked about before on this show, on this video series and podcast, BTR is a massively growing segment. And D.R. Horton has a big division that exclusively does that.
I just seen this last night on my TV, and I haven't dug into the numbers to figure out how they're doing it. But Jago Homes, you're familiar with the Jago Home model.
Mm-hmm.
So they had advertised, find your next future home, and it was financed for 30 years at 4.5% interest.
Sure.
So most likely, I would imagine, since this is what we do, they're probably starting a fund and they're probably pulling from hedge fund investors that are used to getting close to negative or flat returns. They're probably pulling those investors out. They've started their own fund as a debt fund, and they're now offering them at a 4.5% interest to provide convertible debt to a home buyer.
Yeah, or they're doing, mortgage rate buy downs, or there's all kinds of techniques to achieve that rate. And I wonder if there's an asterisk and some fine print under that. But
I'm sure there is. But that's the thing is Jago Homes, and we don't know. Maybe that is a partner of D.R. Horton or someone that Berkshire Hathaway is partnering with.
Yeah.
They're going to make housing affordable for that model.
Yeah, that's right. That's exactly right. And so, if you think about it in a big picture, you have on the surface, everybody that looks at the world in front of them on the surface level, they're like, well, look, the housing market is tanking, right? Values are dropping. Things are going down. Inventory's low. Builders aren't building. We're in or heading into a recession. We've got an election year coming up next year. That always screws with things, right? And that there's that sort of political component. But what does all of this data tell us? It still tells us that where are you going to put your money for the next 2 to 3 years?
Right.
Well, if you put it in the stock market, get ready for a bumpy ride, and don't look at it until maybe 25 or 26. Literally, don't look at your equities portfolio for the next few years, because you may be really upset with what you see. And that's Dr. Burry's bet, right?
Think about it, though. What about the guys that are looking to retire this year or next year? They're getting ready to get this smashed. Bad. And that's another thing. I was in the factory world in 2008 through 10. I was managing a big factory at that point, a big Toyota factory. And at that point, there was people that were betting on retiring in that year or the next year. They couldn't do that. They had to stay at work, or they had to go get another job or something. And it was terrible.
Yeah. And
essentially, if there's people right now that are getting ready to hit the retirement main streets and betting that they're going to have, X numbers of dollars to draw from, they're probably going to have to consider staying in until 25, 26.
Yeah, that's right.
And thank God they don't lose too much.
Yeah. And look, these are real world conversations that I have, with my dad, who is retired and is worried about his nest egg and, what's happening to it. And so, obviously we're working on some investments that he can make with Hampshire Capital to shore that up. And he's certainly not dropping everything in the bucket, but diversifying your investments is key. And so you got short-term equities issues, and then you got Warren Buffett saying, I'm betting that housing is coming back, and I'm betting that housing is strong, because everything's cyclical. Everything that goes down comes up, and vice versa. So as we're sitting here down, he's buying. That's intelligent investing. Buy low, sell high, right?
Yeah, I've been saying that. We're getting ready to have this conference here coming up in November, and everybody's kind of like, why are you doing this? And because, look, guys, there's getting ready to be there's a very opportunity in front of us, a huge opportunity. And everybody's like, how do you know that? Well, you know what I've been saying, and I hadn't heard it yet, but I'm hearing it right now. Warren Buffett's getting ready to the biggest money bet you ever seen in your life. He just did it. He just put it in housing. And
yeah, well,
it's not even the biggest.
It's not the biggest bet, and it's really a fraction of his portfolio. I think he's got 350 or 380 billion. So if you think about an $800 million investment, it's pretty small to him. But to the rest of us, that's a lot of money, right? Either way, it's a sizable enough investment that it is noteworthy, right?
Oh yeah, absolutely. And let's look at the two different investors real quick. So the doctor, he's made his bets and made a lot of money on very short-term bets on shorts. So he's looking for a very short portfolio.
Yeah.
Warren is a guy that never loses money. So he's not going to make wild bets. He's not a guy, he is a long-term investor.
Yep. He is maintain your principal and carefully grow your principal.
Right. So he's looking for that longer 5 to 10 year period. He's not looking to make a 1.4 billion or 1.6 billion dollar bet over the next 24 months. That's just not Warren.
Right.
Not what he does.
Not what he does. Yep. And so, I think the message, I guess, that we're coming up with here, and what I see the story as is that, if you're putting your money in the stock market over the next, 12 to 18 months, man, just get ready for a bumpy ride and be careful. And you should maybe consider hedging that and diversifying your investment in something like real estate, right? I mean, we on any given investment, we're usually achieving 15 to 25% annual returns on our investments, right? Pretty safe in real assets, and that doesn't even count our rescue capital and preferred equity things that are kind of getting more like 30-35%, and land's a whole other category, right? But which by the way, land looks even better and better when you got Warren Buffett investing in D.R. Horton, who is one of the companies that buys our land deals, right? So that all feels really good to us.
When it comes down to it, they're not making any more land. They can make more stock options. They can make
new technologies. Yeah,
they can make all kinds of things change, but they can't make more land yet, and they haven't done it. So that's not going anywhere.
Unless you're in Dubai and you start dredging up stuff and making sand islands, but yeah,
that's possible. Yeah, for sure.
That's about it.
One of the things I want to say is I've also read the book, and Tony Robbins does a really good job. He interviewed a lot of the tycoons of the investment space. Money Mastered the Game is a great book. And if you read that, you'll kind of understand what the reason I'm trying to say this, and I'm bringing this all in the focus here, is he goes over the way the stock market works, the way that these things are managed and everything else. And they're for a long-term portfolio. So to really bring this into context, if you don't have a long time to wait for this next cycle, I would consider pulling that money out, looking at other options, because there is no doubt the doctor's going to be right, in my opinion. And if that's the case, I would, just like your dad, I would look at some alternate portfolios outside of the stock, bond, and mutual fund market. Even if you're just going to do that for the next, 12 to 24 months, I would explore something else. I really would, because I think that if you're close to retirement, don't roll the dice. You're probably going to be working for another 5 or 10 years.
Yeah, and so we've got investments that are as short as 2-year turns on some of our pref equity plays. Most of our deals are 3 to 5 years. Our fund is certainly going to be in that time frame as well. And so you got to take a safe, diversified approach with whatever you feel is appropriate for your portfolio. Of course, every investor has to make their own decision there, but look, this is just something that we live and breathe every day, right? So we're all in on it, and 95% of my net worth is in real estate and holdings. So I know I believe in it 100%.
Did Mr. Warren Buffett or Berkshire Hathaway invest in any type of RV parks or RV sales?
Yeah, I don't. I mean, if he did, it was certainly not anything that made any
under the radar.
It was under the radar. It wasn't any sizable investment, if any. Right. But no, I don't believe so. I think that market is still too burgeoning, right? And so that's why we like it. Is that, I mean, not to go too much of a tangent, but you saw what happened with mobile home parks, let's say, for example, right? Or even short-term rentals, where they were new and they were turning out 12, 15% caps and 12% cash on cash annually. And you were being able to buy it for a 15 cap. And now, they're down to, 5, 6, 7 cap like everything else. RV parks are in that same burgeoning category where you can still get things for 12, 15% caps and cash on cash returns. And our investment thesis is that we're working with groups that are aggregators and are going to grow in that space to the point where there's exits to PE firms, et cetera, or other larger operators, and that we can get severe market share as that cap rate continues to go down over the next 5 years. And that it's a really a burgeoning asset class that we see a lot of, and even if it doesn't, it's just still turning out great cash returns.
It really
right?
is.
Yeah. So it's sort of like downside protection with some upside potential.
You know, the way I like to say is, if it's got a mailbox, I want to own it.
Yeah, right. That's right. Yeah. And so, look, just to tie it up again, I think our overarching message has been clear, but we believe that the housing fundamentals are strong. We are a renter nation. But also that we are going to come out of this with a severe difference in the supply demand quotient for housing. It's just there, and it's going to be there for a long time. And maybe in 10 years it gets better, but for the next 10 years, I'd bet on housing, because Warren Buffett has, and that's, yes, it's a space that we live in and we breathe in, and that's where we focus. But it's just great to see, some generally great investors seeing the world the way we see it too.
Absolutely, 100%. So again, guys, we do these podcasts here. We take our time out of our day, and we do this for educational purposes. We're here. We want to help. And if you guys see this and want a different subject, or you've got some suggestions or want us to deep dive on something, by all means, get engaged with us. Leave us an email. Leave us a comment. Please like and subscribe to the channel, as it helps the channel grow, and share this with someone else, and someone in the space that that may need to hear it, or hey, maybe that guy that is getting ready to retire next door. Maybe share this with him. And we're here to help people.
That's right. All righty. Well, thank you, sir. We'll hope you have a great rest of your day, and we'll see you on the next one, buddy.
Absolutely. See ya.